Hello and welcome to this special show. A very large deal has gone through this morning in the cement space. This morning, we at CNBC-TV18 were the first to report that UltraTech has bought over 20% in India Cements via a block deal. UltraTech, in a statement, has confirmed this and more. We're going to discuss this from all possible angles. We will have our colleagues. Mangalam, of course, is right here. Mangalam is going to sort of present the show with me. And we'll have Hormuz, who will also be with us in just a bit from now to talk about potential other M&A candidates out there in the cement space. We'll also have some experts joining in. Pankaj Tibrewal is founder of IKIGAI and, of course, needs no introduction, veteran money manager. We have Nirmal, cement analyst Jyoti, Gupta, as well as Rajesh, Ravi of HDFC Securities, who's also with us. Pankaj, Rajesh, Jyoti, great to have all of you with us here as well. You know, what I'm going to do is I'm going to just take 90 seconds to tell you about the deal itself, because it happened today. It's a big deal, and sort of jump straight into what has happened. So UltraTech, the largest cement company in the country, has bought into India Cements. They've bought over 20%, 23% to be precise, via a block deal. UltraTech, in a statement, of course, has confirmed this. They've spent a little over $200 million towards this, making this purchase. You know, as I said, this went through the block window, so to speak. If you can sort of quickly tell you about the capacities which are involved. India Cements has a capacity of about, has a total capacity of about 14.5 million tons, which potentially now, with UltraTech sort of putting the foot in the door with a 23% stake, gets access to. Of course, it's a non-controlling stake at this point in time. We don't have confirmation whether there perhaps is going to be an open offer at some stage, whether they will want to increase their stake. In terms of valuations, in terms of what they've paid, it works out to an EV per ton of about $85. And, you know, we always compare it to whether the deal is done above or below replacement cost, which is how much will it take if you go out and build a new cement plant. I mean, you know, this looks like it's a decent deal. It's below replacement costs. Now, you know, this 23% stake that UltraTech has taken into India Cements looks like a stepping stone into future further consolidation of UltraTech's holdings. What does it do to UltraTech's own capacity? Currently, UltraTech has a capacity of 20.5 million tons in southern India. This is excluding Kesoram Industries. Now, with India Cements and Kesoram, it will more than double its capacity in the southern part of the country. Total will be about 45 million tons per annum. This indicates a 22% market share in South India for UltraTech. Earlier, market share was about 10%. Top two players, which is Ambuja and UltraTech, post this deal will control about 35%. Top five players, 65%. So we're looking at sort of more and more consolidation really coming through. There is also, I mean, other optionalities involved, but you know, that's for the future, because, as I said, it's a non-controlling kind of stake, but it could, of course, lead to a higher stake sometime in the future. The promoters, of course, still very much there at India Cements. India Cements has large land reserves, gives the optionality for expansion at some point in time. They, of course, also have renewable energy and shipping assets in southern part of the country as well, which UltraTech can put to good use, as it's shown with some of the earlier acquisitions. So this is, I mean, a quick bit about the deal itself. Let's quickly sort of welcome in our guests who are with us. I mean, I'll start with Pankaj first. Pankaj, your quick thoughts as a money manager who's seen many cement deals in your careers, you know, at Kotak and elsewhere. What do you make of it? What did you make of it? And does this sort of look like a deal where UltraTech eventually will go, you know, the full way, or this is just a foot in the door and saying, well, we are there, and to kind of show its intention at this point in time? Go on.
So, good afternoon, Prashant. From a industry perspective, if you look at the cement industry has traveled quite a distance over the last decade. Over the last 10 years back, the top 5 cement players in India used to be about 40% market share. As we speak today, it's moved about 55 to 60%, somewhere between that, the top 5 guys. And consolidation has played a very important role. And I think the way forward over the next couple of years will be more consolidation definitely on the cards. However, as we speak at the ground level, the near-term benefits of consolidation have not been seen. The prices have been extremely weak at the ground level. And over the last decade also, the pricing CAGR, if you look at, has not been able to beat inflation in the cement industry. So it's medium-term, long-term positive, But in the near term, the pricing in the cement industry has been extremely weak. And that reminds me, in 2003 to 5, if you go back and recall, there was a price war which happened between the erstwhile L&T when they used to own cement and Ambuja. And that time, both the companies sold at below their variable cost. And as a result, the smaller players in Gujarat belt had to close down for almost 6 months and they never came back again. The worry is that in the urge of taking market share and to consolidate and grow their market share, the pricing has been kept extremely weak. And that's something which one needs to be worried about in the near term. The demand has been extremely strong over the last few years. Even in this year, the demand has been very, very strong. But how does that translate into profitability is yet to be seen. Pricing is extremely weak. So medium term positive, but near term we need to be careful on the pricing front, which is not so great in the cement industry.
Right, fair point there, Pankaj, and let's welcome Jyoti as well as Rajesh as well. This question comes to you, Rajesh. You know, in light of this deal, how do you view stocks from three places? The first one is from the standpoint of UltraTech itself. Now that they've gotten a foot in the door, how do they derive more value out of it in the very near future? How do you ascribe this deal into your overall, assumptions? That's point number one. From an India Cement shareholder standpoint, where do you see this going and what your stock call would be out here? And then the third thing would be the region itself. You know, the southern part of the country, we have seen a lot of smaller players out there which could be bouncing on hopes of acquisition, them being acquisition candidates. And then you have one large player, Ramco, which is underperforming because in just the last 2 weeks, two big players have made deals here in the southern part of the country. So from an India Cement standpoint, from an UltraTech Cement standpoint, and all the other standpoint, where do you stand on this, Rajesh?
Hi, good afternoon. See, first coming from an UltraTech perspective, given that the other big player, Adani, has been aggressively in terms of M&As, UltraTech had to take some stands. They have already guided to go to 200 million ton capacities over the next 3-4 years. I believe this is one step towards that. This 15 million ton, obviously, this is just phase one, the strategic acquisition of 20%, 23%, and I believe this should be followed by the promoter stakes coming through. If that is, that would be the thought process in my view for UltraTech. And at least by acquiring this, this 23% stake, they have blocked out other big players eyeing into India Cements. So this asset, primarily, if you look at the assets the operating assets are not great because these are very old assets, almost 30 year plus. Most of the plants are 30-year-old plus and extremely inefficient. They would require a lot of cash infusion to bring them into meaningful, margin space, which would mean to bring them back to 600 to 800 rupees EBITDA margin. That itself would require a decent amount of capex. The limestone reserves and other infrastructure and land bank is what ultimately has to be spelled out. What is the opportunity which UltraTech would get whenever they get hold of a majority stake? So this is from UltraTech perspective. Now, second angle from UltraTech, this acquisition will increase UltraTech, including Kesoram capacities in south, to close to 55 odd million ton, which would be closer to around 28-30% of the total installed capacity. They will go south heavy for sure with these two major acquisitions coming through. So that they will have to again balance out in other markets. If you look at from the minority shareholders of India Cement's perspective, this deal, the announced deal comes out close to $90 for a company where the operating assets are extremely fragile and weak, and most of the value for the buyer is coming in from the non-core assets, and that is where we believe that's a good price which is offered. I don't see prima facie anything going north of $90. Even for UltraTech to bidding for the promoter stake at more than $90, most of the other deals have gone through at similar price. Coming to the market overall in South, and as even Pankaj Tibrewal sir mentioned, he himself is a veteran, and it's honor to share the dice with him. And I totally agree. See, while in medium term, this 55% capacity market share the top 5 player will go to 65%, and that will happen over next 1-2 years. And medium term to long term, the outlook is indeed from that is where the pricing predictability will improve. The pricing CAGR in the past 10 years is hardly, last 5-6 years is hardly 1-2% CAGR, and that has been the bane for the industry. At least that will go away. The predictability will improve, and margin profile should look up. But that is a medium term, 2 year, 3 year down the line.
Got it.
In the near term, there is pressure which the industry has to, the pain will sustain in the industry near term.
Okay, got it. Jyoti, your first, and well put, Rajesh, well summarized. Jyoti, your first thoughts as well. I mean, I think a lot of viewers want to know whether they'll stay. This will stay just a financial investment at this stage, or will this be, will this eventually, it's a stepping stone for bigger ambitions?
So, my understanding, I think this is, I think everybody is aware that Adani was also looking at buying India Cement, and I think this is one way of blocking Adani not getting into this deal. Second is, what does UltraTech get out of it? Possibly a billion ton of reserves and a 14.5 million ton of cement with 11 million ton of clinker. However, the thing which is, first of all, it's just a 23% stake. It's a long way to go. Maybe it might conclude by the end of this year. If it does, we'll have to wait and watch how things pan out. There are two plants like Sankari and the Sankari Nagar, which are actually, the reserves are not quite great. And the plants are not, the only benefit that I see that possibly the plants have been underutilized around 29-30%. So if they were to, and of course, there's a huge cash infusion which will be required to kickstart the plants, at least at optimal levels. Thing that I see for UltraTech is possibly strengthening their position in the south, and possibly some sort of price sanity is expected to come going forward. So apart from that, yes, I think if he has put a foot in the door, then obviously he's going to, the objective has to be to take over major stake eventually,
yeah.
which I believe should happen.
Okay. But both of you, both Rajesh and you, Jyoti, agree that there has to be more investment to bring the assets and bring the assets up to a level where, it can generate industry level EBITDA per ton, etc. Let's, Mangalam is going to now give us a detailed outlook on some of the consolidation we've seen in the southern part of the country. Mangalam.
Absolutely. This deal is announced today, and if you just take a look at the last 2 weeks itself, this is the second deal which has been announced in the southern part of the country itself. Not too long ago, earlier we got the announcement that Adani Group has gone ahead and, invested in Penna Cement for a price of close to around 10,422 crores. What's interesting is that it's also the second time UltraTech and India Cements are coming together this year for a deal. I mean, it was in April where UltraTech went ahead and bought India Cements Maharashtra unit for for about over 315 crore rupees for 1.1 million tons. If you look at the capacity right now, India Cement on an operational capacity is about 1/10 of UltraTech. But here's where things get interesting. If you look at the southern part and you look at the two major factions here, we have UltraTech, which has close to 27 million tons capacity. This is what is operational as of end of FY25. Kesoram about 10.7. India Cements is about 13. And then you have, the Adani Group, ACC 9 and Penna Cement close to around 14 million tons as well. So what does this do to the entire market is something that we'll have to keep an eye out on. Secondly, what does UltraTech do to, improve India Cement's operating metrics? FY24 EBITDA per ton for India Cement was just about 172 as against UltraTech, which was closer to 1100. So how do they, maximize the operational performance out here is something we'll watch out for. This, of course, is if they go ahead and decide to increase their stake further and invest in the company, be in the driver's seat, so to say, as well. The other thing that will happen to UltraTech, if at all they go ahead in the driver's seat, is the valuation unlock, because UltraTech itself currently trades at close to around $238 per ton on EV per ton basis. India Cement itself is close to 88. So that big differential will have to, be taken care of as well. And finally, the deals which are being done are close to around 85, somewhere between $70 to $90 per ton on an organic capex basis itself. So that leaves us with basically three questions. One, Will there be an open offer for UltraTech coming in from India Cements? What does UltraTech do to perhaps go ahead and derive value? Secondly, what happens to India Cements' promoter family stake? And thirdly, more importantly, what does this do to the market on the whole? The other South-based players who are looking to get acquired, or the other players who are looking to acquire some assets as well?
Well, that's beautifully summarized. Maybe I can just toss it to Pankaj. Pankaj, as you start to deploy some of the sort of money, you start the deployment process, and I think you already started, right? Is cement on your radar, Pankaj?
So I think industry structure-wise, I think cement is in a very sweet spot.
Okay.
And just look at some of the maths why consolidation is the biggest agenda for all the large cement companies in India. Even if you take 7 to 8% growth in demand, you need to double your capacities over the next 9 to 10 years. And if you look at the supply side isn't catching up over the next decade in terms of whatever plans have been announced. And the biggest bottleneck there is the limestone mines. Except South India, you look at the other places in India, and please don't forget that cement is a regional commodity. It's not a pan-India commodity. So you need to have limestone near to your factories. And except South India, there are not too many mines which are available for the expansion which will happen. And second, if you speak to the equipment suppliers, which is FL Smith and others, they are not taking any incremental order. They are full on order books. So I think that over a period of time, organic supply may not catch up with demand. And most of the large players understand this part. And probably they are trying to secure in some of the smaller names, regional names, wherever they are getting a foot, along with infrastructure and limestone mines from a next decadal perspective. So I think my expectation is more consolidation should be there over the next few years. And smaller players will find it difficult. Maybe 2-3 million plant, 5 million plants may not be as relevant in today's context as it was a decade back. So I think you will see more deals emerging in this space as you move ahead.
More deals emerging. That'll be interesting because over the last 7 years or so itself, there have been more than 15 or 16 deals in this space, Pankaj. So what we'll do is we'll let you all hold on to your thoughts. We'll take a short break, come back on the other side. We'll focus on the deal, the other prospects and other aspects around this announcement that was made today as well.